to deal with losses. So now this is a very interesting topic in the trading space, more especially as you know the statistics go 90% of retail traders lose 90% of their capital within the first 90 days of their trading career. And it's something that's not something that's unfamiliar with. It has happened to me over the 7 years of my trading career. A lot of people would ask, why don't you quit if you're going through losses? It's because I understand my losses. My losses were managed losses. This comes after, just to give you a background story, after we experienced a loss on US oil yesterday on our daily life trading group, and I realized that most of the people that react negatively to losses, which to me it says they didn't understand what losses are. So I just want to break them down. But before that, I'd like us to go through the US oil trade that we took yesterday and look at maybe the mistakes that we probably made. I did show in the group, I think I'll be a very naive mentor or a coach if I didn't show my losses within trading, because they really form a big part of your trading. And later on in the video, once we are done reviewing this trade setup, I'm going to show you guys or share with you guys 3 tips that I use to deal with losses.
All right, ladies and gentlemen, as promised, let us have a look at crude oil or WTI or US oil, whatever you want to call it, the Saudi money, the black gold, whatever name you want to give it. So we had this trade set up yesterday. Everything was looking right nicely. So we had an initial uptrend movement right here. So market was pushing strongly to the upside, and from this we had this 4-hour this area was the 4-hour area of supply that we anticipated the market to make a turn from, which is the 92 level, and then we're expecting to go all the way down to probably 88 to $89 per barrel. So what we saw here is the market had that reaction, pushed to the downside to form a higher low, and thereafter we saw the market pushing further higher, sweeping liquidity on the left hand side, which is right here. Soon as that happens, soon as we got to 92, as you can see, that round zero psychological level, whatever you might call it, the market then pushed aggressively to the downside and changing character on the left-hand side. And we were waiting for the market to come back and mitigate this area of supply, which was responsible for the change of character. And the market did that. I think the mistake that we made here, probably is not a mistake. I'm still entering the market according to my trading plan, which is this was the risky entry. However, the conservative entry was supposed to come after we change character here and maybe come back up and then probably make a second entry at this area. But we decided to take the risk entry where we never offered opportunities to take the conservative entry. So what happened next? I want to show you the after, right? So what happened next is the market just did something, just pushed to the upside. Now you might when you see this, you might think that probably this manipulation, this broker is manipulating me. I'll tell you something. Okay, there might be a possibility for that, but the truth is the market is always right. So most of the time you're the one who is wrong. So I would say in this instance, I was supposed to wait for the second change of character, which was more confirmation that really oil is reversing to the downside from the 92 level. However, I feel like there's nothing wrong here. I still took the trade according to my trading plan, ladies and gentlemen. And why am I not worried? It's because one, I was risking 0.5% on this trade setup, which is according to my trading plan. I don't know how much you risk. And for you not to worry or to reduce the anxiety of losses, I would say you need to also reduce the risk that you have put on in the market. Now, with that said, ladies and gentlemen, I would also like to show you something, or just I would say a mini lesson that I've prepared about how to deal with losses. Losses can invoke one of the two, should I say, most dangerous. I don't know whether that is the right wording to use. So it can invoke one of the two. Sorry, yeah, one of the two most dangerous emotions in the market, which could be fear and greed, right? So you need to know how to deal with losses. So losses can invoke fear in the sense that if you're afraid of taking losses in the market, you're not gonna try out, even if you have a great setup or high quality setup, because you fear losing. And you should know that losing is part of the game, but there is the right way to lose. There is also gambling, right? And then greed, there's a point in trading where traders are euphoric. For instance, if you have maybe a 12 winning streak, like all 12 consecutive trades were winners, and then that's a dangerous stage, because traders, when they get to that level, they then do not perceive risk. So that's a euphoric state. So you need to avoid that. That comes from greed. But let us look at the 3 tips on how to deal with losses, really. So number one, you need to take some time off and review your trades. Basically, here, what you're looking at is why this trade happened. Remember, taking some time off is very important, because you do not have to come back and revenge trade. Always wait for your high quality trade setup. But I'll say review this trade before you take the next one, because you might repeat the same mistake if you do not know what you did wrong on the previous trade setup, right? So you need to look at why did this loss happen, right? So once you've went through your trading plan, your checklist, and you find that you did everything according to the book or your mechanical trading plan, so then that means the responsibility is on the market, right? So there might be volume that came into the market that we were not aware of, right? There might have been micro news that were released that we were not aware of. So such things happen in the market. So you need to take that into account. And lastly, and most importantly, on the first tip is know what improvements you need to make. For instance, on the previous trades, I know that I need to start considering conservative entries. That is because they have more confirmations that maybe the trend is reversing or is continuing to the up or to the downside, right? So I hope that tip helps. Tip number 2, very important: reduce your risk. I can't emphasize this enough. So there are traders that would risk all the way to 20% per trade, and to me that is ridiculous, because what that says is that you only have 5 chances. What if all 5 trades are losers? 5 consecutive trades are losers. That means you've blown their account, right? So I always emphasize for people to reduce their risk. As mentors, as a psychology and risk manager coach, I recommend anything between 1 and 5%. Actually, 5% is ridiculous. In the proprietary trading space, we are required to risk anything between 1 and 3%. That's a professional trading flows, right? And my personal daily drawdown, it is 15%. That means if I'm risking 5% per trade, I'm only allowed to take 3 trades per day. And I'm also not going to force it, right? Because there are people that see that have daily targets, right? I'm not the type to trade with daily targets. Why? Because I do not control the market. The market decides when it gives me a high probability opportunity, right? So I cannot say I have to make $500 today. It all depends on the market, right? And number 3, know your edge. An edge is basically nothing than the fact that there's a high chance of one thing happening over the other. And we take the route of the highest probability all the time, right? So according to my age, I use a risk reward ratio of 1:5. How does that help me? We're going to look at that later on. But let us look at risk reward ratio versus win rate. So there's a negative correlation here. People don't understand, right? So I've had people say they have a 99% win rate strategy. Well, I don't know, but after 7 years of my trading and meeting real professional traders trading 7, 10 figures in US dollars, I've never had any of them tell me about a win rate that's above 60%. Anyways, that's a story for another day, right? So according to this, as you can see here, according to this, the higher your risk reward ratio, the lower your win or the win rate that's required. So it means if you have a higher risk reward ratio, so that means you do not have to have a holy grail strategy or a strategy that is the best of the best. All you need to do is just take trades and stick onto that high risk reward ratio. You will be a winner. I'll demonstrate that. So if you're using a 1:1 risk reward ratio, that's a 50-50, right? So you might need a strategy that is that wins at least 60% of the time, right? If you're using a 1:2, so maybe you might be falling around 40%, right? If you're using a 1:3, you might be falling around 30%. My personal favorite is this one, right? 1:5. At 1:5 risk reward ratio, what normally happens for me is that I only need to win out of 10 trades, I only need to win 2. Let us look at an example. So I have this example here on the right. My mouse is acting up. So I have this example here on the right. So imagine we're taking 10 trades at my recommended risk reward ratio. I'll say start with a 1:2 or 1:3. This requires a lot of experience, that is. Right. So we take 10 trades at a 1:5 risk reward ratio, and then we incur losses. It doesn't matter the sequence. There's another thing. The first trade might be a loss, the next one might be a winner, or you might be losing all consecutive 8 trades or winning all consecutive 8 trades. We do not know that. So our job is just to execute based on our edge in the market. Once again, 10 trades at 1:5 risk reward ratio, we incur 8 losses. So according to this, if we're risking 1%. If and the potential reward that we're expecting from that opportunity is 5%, right? So 8 losses, so we're down 8%, and then 2 wins, that means we're up 10%. So if we look at the net profit or loss here, we're going to be up 2%. So the importance of a higher risk reward ratio, number 2, the second important thing is that it's gonna cover you on the days that you're going through a losing streak. But here's the challenge: you have to stick to the same risk reward ratio. So what I personally do is every trade that I take, it has to be a 1:5 or more, nothing less, so that I am within these parameters. I'm stacking the orders in my favor. Now, ladies and gentlemen, I hope those tips helped. I'm looking forward to seeing you. We have an event later on tomorrow at 7 p.m. Thursday tips will be going through how to create a trading plan. I'm really hoping to see you there. I hope you're going to have a lot of questions, and I'm going to prepare a trading plan template so that you can come up with your own trading plan, so to speak. With that said, ladies and gentlemen, that is it from me, Bax Capital, your risk manager and psychology coach. I'm out. Cheers.